Hi, everyone, and welcome to today's webinar presented by the Franklin Partnership and the Policy Resolution Group at Bracewell. This is your team in Washington representing NTMA and PMA. Joining us for today's conversation, this is Caitlin Sickles speaking, and I have Paul Nathanson with me from Bracewell, as well as Omar Nashashibi and John Guzik from the Franklin Partnership. This is our 7th installment of our weekly webinar series designed to help manufacturers understand the many complex actions being taken by the federal, state, and local governments in response to the COVID-19 pandemic. As a reminder, this webinar, both the recording and the slides as part of today's presentation, will be available on our COVID-19 Rapid Response website. You can find that at onevoiceinfo.org. It's onevoiceinfo.org. So don't feel like you have to write everything down. You'll be able to get all of this information. As always, we'll be covering a lot of content in a short time. Here's a quick agenda about what we'll be going through today. We try to keep these not to repeat previous content, but to just tell you the latest. So we do encourage you, if you've missed previous presentations, do feel free to go back and catch up. And there's our contact information available on the website. So if you have questions, you'll be able to do that. One other thing I want to flag for you, today we're going to do something a little bit different during the presentation. We want to hear from you directly. So we're going to ask you a question when we get to the PPP section about whether you have applied for a PPP loan and the status of that loan. You don't need to do anything in order to answer the question. A question will appear on your screen. You'll be able to respond. So look out for that. We do need your answers. We use the information that you give us to advance our advocacy efforts in DC and with the media. So please do participate, and if it works well, we'll do more interactive things in the future. So with that background, I will turn it over to Omar and John to get started on the latest.
Thanks, Caitlin. This week, we're going to talk not only about the guidances that are being issued by several agencies like OSHA and CDC, and stuff, but we're also going to talk about the reopening. Many states are in different phases of reopening, and so we're going to start with how we have added to our website, our One Voice Info, website, to talk about what each state is doing. Now, we caveat this that we're not lawyers, but in some states have certain guidelines for reopening, but then the cities within the state have a different. So we're going to talk a little bit about that, the OSHA CDC guidelines. The disaster loan program, the EIDL program, was funded as part of the last phase of funding. And so we're going to talk about that. We'll update you all on the Main Street lending program, which is another program. Details came out this week from the Federal Reserve. We're going to update you all on the PPP program and let you know what are the next steps moving forward as we endure this pandemic. Omar?
Thanks, John. So let's just, as John mentioned on the state reopenings, there's been a lot of questions that we've obviously received. We're all doing the fire drill when things closed, and now the reopenings are being done a little bit differently, as you've got the governors and also at the city and county level, different decisions being made. For example, you had Colorado start to reopen about a week ago now, but the city of Denver said no, not so fast. So what we're trying to do is, we can't really keep up with the breaking news because, like we said, there's 3,200 counties. They're all doing something different. So what the NTMA and PMA have done is every Tuesday afternoon and every Friday morning, we're updating our state reopening guide. You can click on your state and it will immediately take you to the latest orders that we have. So for example, if you were to click on Minnesota, it would take you to the latest based on either that Tuesday update or that Friday morning update. That'll all be on the website, and we're also sending out to members. This will take you directly to what the governors are saying. And for example, and you'll see on the next slide, some of the links to which it'll take you. If you look on the Ohio down there, they did one: information on manufacturing, distribution, and construction sector can be found here. So when you go to our website, this is found under the state and local guidelines. It's on the right-hand side. It's about the second link on the right. You'll click on the PDF. It'll open up that first page, jump to your state, and then if you were to click on this for Ohio, this is the image that you would see. So what we're trying to do is get you the most up-to-date information without overwhelming you, because just because the state of Ohio or state of New York has stated something, the county in which you're located may also have something different to say about it. So that's why we're asking all of you to continue to check with your local sources, as well as keep up with what One Voice has to post. This will give you an example of what Ohio is doing with regards to mandatory. We obviously know the 6 feet distancing, daily disinfection of desks, shift change, staggering lunch and break times. That's on the mandatory side. This is a longer document that has a couple other points down there that previous page link will give you. So this is just an example of what state does. We did get the question a couple of days ago, what happens if I don't comply? Again, all states are going to be different. Consult with an attorney, but in the case of Ohio, they'll have your local health department come out and take a look at penalties, inspections, and we haven't heard about shutdowns or closures, but that potentially could be a repercussion. So we ask you to watch that very closely. This is just what we will not be covering, and what, as usual, we do have more information on the Main Street Lending Fund. We do not have a start date, however. We do have term sheets that we'll discuss in a few slides down the way. The PPP, the loan guidance for forgiveness, that we'll talk about the delay since we still do not have that. And we know we're going to have many questions on the audit process, which we'll discuss. You know, there's some great resources out there. And Paul, Caitlin, I think that the webinar that you all held this week is really helpful to get actually some legal advice on some of this.
Yeah, so we mentioned at the outset that we are not lawyers, but we know some good lawyers, and both associations have good labor lawyers, and we have referred many questions to them. In addition, Paul and I worked alongside some excellent labor lawyers at Bracewell. They put together a webinar which was published yesterday. This is just a little promo for it. Basically, it's an hour and a half of question and answer questions and then responses from this labor lawyer team. They're really excellent. I think it's a very valuable resource. You can find it on the onevoiceinfo.org website. I just put it in with the One Voice webinars, so you can find it there. But do check it out. I think it will answer some of the questions. And then, as always, if you have other labor questions, we do work with the associations to get them answered by your lawyers.
And John, speaking of labor and lawyers, we've got a couple new OSHA posters that have come out.
Yeah, I think the Department of Labor is #1 in issuing posters. I think they issue a new poster each week. This is an example of a poster that is not mandatory, but suggested that you would put up in your facility, which talks about the who would be eligible for the paid sick leave and the Emergency Family Medical Leave Act. We won't go through this, but this poster is available through the Department of Labor, which, so it's additional guidelines. Also, the OSHA issued out clarification of the risk exposure, and clearly many PMA and NTMA members almost all of them will fall into the low risk, which is minimal occupational contact with the public or coworkers. But they did clarify here, and this is loaded on our website, which talks about who would be considered a high risk, like people in the medical community, versus who would be a medium or low risk employer, low risk employees.
Now, a couple of additional government guidance here that we've got on this slide, and the next one will be on CDC. Some of this that we know, and there's been additional guidance on reopening from CDC as well that you can find. That's usually your go-to, that all of the ones that are out there, all the different states keep looking to the CDC. This is on employee screening, so think when they're doing shift change and coming into the shops. Many of you have asked and already begun to put in place some kind of a testing system, at least from a temperature check. If you're in Ohio, again, you've been doing this for now a good 30 days or so. This is the latest from the CDC that came out a little bit ago with regards to the process for the person that's screening. Their preference, and this is a clipping from their page, is about 3.5 pages long. Above this, they talk about their preference to actually have a barrier, like a plexiglass or some type of barrier between the tester and the person that's being tested. However, they say if you cannot have a barrier control implemented during screening, PPE can be used when the screener is within 6 feet. They also go into more details down below here with regards to the invasive and non-invasive thermometers. For example, your non-contact thermometers are used. Just follow the normal manufacturing instructions, but if you're doing another type of contact test for thermometers, then they obviously need to be cleaned between each check thoroughly there as well. And then following each screening, that screener must remove and discard all their PPE and hand wash soap and water the 20 seconds or use the hand sanitizer. So this is just additional guidance that the CDC here has put out more recently around the screening process upon arrival, is the way that this guidance is intended to reflect. This one is also on machinery. We have had the question come up in the past with regards to how long can COVID-19 last on aluminum, on steel, and we've talked to their trade associations, and they'll tell you up front that you're more likely to get it from the delivery driver than any of the metal that they're delivering. However, the CDC has started to look into manufacturing processes and others that have heavy equipment and machinery, for example, stuff that cannot be removed from its place, which all of you obviously have. Then take a look at some of the areas here that they cover. If it has not been in contact with someone infected, then does not present or expose a hazard. However, if you recall a few weeks ago, we talked about cleaning of facilities, the 7 days, the 24 hours with the windows open. That's similar. So this is more if you have a confirmed COVID and you want to disinfect that machine, you want to start thinking about how this might impact that machinery's operations, and talk to a local, you're a disinfectant expert, about when that machine can get up and running, especially if it's been handled by a COVID confirmed person. We don't want to have machines down in addition to having the employees that are hopefully recovering out as well. So that's another guidance to take a look at. But John, one of the things that I know we don't spend as much time on, we wanted to spend here just the next quick couple of slides on the economic injury disaster loan that the SBA has put out. That's separate from the 3P program.
Yeah, there's three different programs out, multiple different programs, but there's three main programs that manufacturers are available to get funding. One is the PPP program, one is the Main Street Lending Program, which we'll touch on, and the third one is the Economic Injury Disability Disaster Loan Program. For every state is eligible for this as a result of disaster declarations. And so this is a program that which was funded through phase 3.5, where the Congress put in an additional $50 billion for loans and $50 billion in loans and $10 billion in grants into this program. The problem is the Treasury Department is so engrossed in moving dollars out the door, whether it's through the PPP program or individual checks. The Congress has appropriated that money, but that the program is still not up and running yet, and we expect some guidance from the Treasury and SBA in the future so that additional resources will be available. This is different from the PPP program. This is a loan that you have to repay. It's a 3.75% interest rate. You can use this loan not just for payroll, but you can also use it for accounts receivable and other options. If you get a PPP program, you still can get an EIDL loan moving forward. So, and then the next slide shows the distribution, because they had funding in this program, they ran out of money. Clearly, this has been a very popular loan program. Roughly 39,000 loans have already been given to nearly all 50 states. Almost $8 billion has been spent from folks using this program. Average being about the average loan is approximately $20,000. So again, this is just another avenue out there. We will keep you updated on when these dollars do become available from the SBA, and we anticipate this happening relatively soon. But the big news this week, Omar, was the announcement by the feds and how they are going to roll out the Main Street Lending Program.
That's right. And as John mentioned, there's multiple vehicles out there that the government has put together. You all recall that early on the onset, when they passed CARES Act, there was another discussion of those with employees of 500 or more up to 10,000. They've changed that program. So we now have three programs. The way to read this slide is you look at the bottom. New loans are exactly that. New loans, that'll be new originations. Priority loans, those are new loans that can be used for pre-existing debt. The new loan column on the left cannot. Priority loans can be used for that debt. What they've done is they've created a third option for expanded loans for even larger that can go up to $200 million. The ones that our members will be focused on, what they did is previously they had a lower ceiling for the minimum, and that was about $1 million. And they thought that wasn't going to be enough for small businesses that were shut out of the 3P program over at SBA. So now a small business that wants a loan of at least $500,000 can also go over to the Main Street loan facility. There's the Main Street New Loan, that's the MNLF, and then there's the MLPSPL, and that's the priority loan. So if you go to your lender, the lender again would have to participate in this program. Keep in mind 3P and these Main Street lending programs are all through your banks. The EIDL, you actually would go through a portal over at SBA, as John mentioned, when it's back up and running. So these are terms, your payments are deferred for 12 months on it. And so that will certainly help some folks keep cash in the bank. They So we got a question with regards to collaterals, and we'll touch on that here in a second, but these are some of the overviews. Keep also in mind, if you do get a 3P program loan, you can still go over and get the Main Street Lending Facility Fund loan as well. And that can be up to $10 million and for up to 15,000 employees. So it's going to cover pretty much all of our members. And so to address this, some of the term sheets that are out there, Main Street loans, they are full recourse. You do have to pay them back. They are not forgivable, but they set up a different pay term that you do over 3 different times. So what they'll do is the first year is deferred, and then the second, third, and fourth year are going to be when you start paying, and they'll do it on a spread time frame there as well. Again, the priority lending facility permits the use to pay for existing debt, whereas the new loan facility does not allow you to do that. And we mentioned the 3P program, and you're also still eligible here. You would still have to submit documentation that is required by your lender. So you'd have to go directly to the lender to see what additional requirements on there. The language in the term sheet, and we got a question that's here, what about personal guarantee requirements? The language in the term sheets for those programs state that, and this is a direct quote, loans may be secured or unsecured. So again, you've got to go to your lender and take a look at what their terms are going to be, that they are going to be layering on top of what's out there. We also got a question of, since LIBOR is going away soon, we'll be able to change the benchmark rate without Fed approval. What our understanding is, instead of using the SOFR, the lender community went to the Fed and said, if you could use SOFR as intended or as previously discussed, the challenge there was to divert resources away from the other critical activities that they were doing in response to the pandemic. And that's why they ended up going through LIBOR. But keep in mind, these loans are only through, the portal should only be going until September 30th of this calendar year. So they aren't going to be restricted in terms of when you can apply for them and when you can go there. And for those that do have some debt that are going into the MSPL facility, as long as your debt is what they classified as pass by the lender, then you're able to go ahead and undertake that loan with the intent of paying some of that back as well. Now, again, we've got the term sheets that we've got out there on the Federal Reserve site. This just came out yesterday, so encourage you to start talking to your lenders if this is an option out there as well. I'll turn it over, John. You want to talk about the status here, where we are on the 3P program and maybe the poll?
Yeah, as we start talking about the update where we are in the PPP program, Caitlin, maybe you want to, this might be an appropriate time to launch our 60-second survey that the folks who are on this webinar can participate in.
Absolutely. Okay, so you guys should be seeing the poll on the screen, and then John, go ahead.
Okay, so we'll leave this poll question open for roughly 60 seconds, 60, 90 seconds. We'll talk over it. The next few slides are more generic stuff that many of you already know. But as you know, the Congress passed an additional $310 billion in the PPP program to get it funded. The portal opened up at 10:30 in the morning this past Monday. In the first 24 hours, $50 billion of loans were processed. So as Omar and I have mentioned in weeks past, we are concerned that the $310 billion that the Congress appropriated this last week is not going to be, the fund will run out of money. Treasury believes that there's enough money out there to maintain this program. There are concerns from some in Congress that small lenders are being pushed out of the program. And so that's why when Congress passed the $310 billion, they set aside $60 billion for smaller lending institutions, those under $50 million in assets. $30 billion goes to between 10 and 50, and then another $30 billion is reserved for those lending institutions under $10 million in assets. So, but recognizing this, the Small Business Administration has started to slow down the approval of these loans. And that's why the survey question that we're asking right now is so important. On Thursday, maybe it was Wednesday, the Small Business Administration made an announcement that between 4 o'clock in the afternoon and 11:59 that night, the SBA would only process loans from lending institutions with loans of under $1 billion. And so I think the Treasuries, SBA are all recognizing that this money is going out the door really quickly. And so they wanted to make sure that certain amount of dollars were going to the smaller lending institutions and small manufacturers and folks and such. But it did not, the pacing process did not limit it. That was the only time. The smaller institutions will continue to have their loans processed along with everybody else, but they want to make a special set aside to make sure that those loans were being processed. Another issue that has been going on, and we've heard, how the LA Lakers and the Ruth Chris Steakhouse, many larger institutions were receiving, Harvard University were receiving PPP loans. Well, the SBA announced that essentially they will be auditing and reviewing any loan over $2 million. In reality, we believe everybody who gets this loan will be scrutinized. Eventually, the SBA, I think, under pressure from Congress, is going to have to release the recipients of all those loans. And so moving forward, hopefully there'll be less embarrassing situations where these larger institutions are not receiving this funding.
Caitlin, I think we've got some poll results back.
Yep, the poll results are up on the screen. I know a couple of people had technical issues with the poll, but we did get the majority of the responses in, so thank you everybody for participating. The results are there on the screen, and I won't read them to you, but I'll let Omar sort of break down what this means for us and how we use this kind of information in our advocacy efforts.
Thank you. This is very, very helpful. What we've done, as you all know, we did send out a poll to both our memberships a couple of weeks ago on April 13th through 15th, and we got almost a couple hundred responses. We took that information to Capitol Hill. We'll probably be sending another one here going across in the next couple of weeks to get a better sense of where things are. But this is very helpful. Again, 76% have applied and already had the funds received. Another 10% have their funds that are been approved but are pending to come in. And then 1 in 10 of our members did not apply for the 3P program loan. So thank you. That is very helpful as we get a better sense of the level of demand for this and try to anticipate, as John mentioned, how much longer the funding here is going to last. And I think John's right. There is starting to be additional scrutiny, and we've gotten some questions now about the additional, changing the rules while we're already playing the game from both the IRS of last night and SBA and others. But part of the challenge here, as John mentioned, is they were so overwhelmed on the 3P program that they had to start pacing the loan system. They were only allowing banks with less than $1 billion in assets the other night, this is on Tuesday night, to go into that portal and be able to start putting in applications. What started happening prior to was the larger lenders that have the technological capabilities, they were submitting just in major batches of tens and thousands, and that's how the funds were drawn down so quickly. So that's how we've actually gotten here to Friday with still actually funds left in the 3P program. They're trying to slow it down and stretch it out a little bit longer because, again, as John mentioned, when we'll talk about in a second here, Mnuchin thinks that it is adequately funded. We do want to now talk about some of the concerns that we've gotten over emails effectively since Tuesday, since John pointed out the Los Angeles Lakers got their $4.6 million. You'd think someone in their PR shop would have told them that's not a good idea. So the SBA is going to audit loans over $2 million. What this entails, we do not have the full guidance on it. You can see below on Twitter, the administrator of the SBA says that regulatory guidance is coming. Our understanding it's going to be tied into the forgiveness guidance on which we're all waiting. Now, what does it really mean and what powers do they really have? I think that they're going to look at the documentation that you all provided when you submitted your application for the loan, and then they're going to look at the forgiveness documentation that you're going to provide at the end of the 8 weeks. Recall the forgiveness documentation is going to include the payroll costs, the utilities, the rent, mortgage interest. So what they're going to want to do is see how it aligned before and see how it matched up afterwards. And the concept there is, what we actually heard, there's literally only one person that's doing oversight at SBA right now. So they're going to bring in folks from Treasury to take a look at it. Keep in mind the process here is the banks are the ones that submit your forgiveness application to the SBA. So you're going to submit your paperwork somewhere around week 7, week 8, and then afterward and after that, then the bank is going to ask for additional more, maybe not. Then they're going to submit their packet to the SBA for review. The SBA signs off on it. Within 60 days, the bank can get back to you and tell you, yes, you've had it forgiven. So that is the one, that's how they believe they've got some time in terms of that audit. What are they going to look at? Again, it's going to be just the documents so far as we're aware, the documents that they put out there before, and after, because this is the question regarding certification that we've gotten. Do businesses owned by private companies have with adequate resources of liquidity to support the business ongoing operations qualify for the 3P program? So that's basically the question that we got from some members a few weeks ago saying, well, I'm okay right now, but I don't know what's going to happen in 2 weeks. So I feel like I need to bring somebody on, or I need to take on this loan application. Here's what question 31 says. Again, loan request necessary and the borrow to support the ongoing operations of the applicant. That remains the line that they all stick to. So what does that mean? The ongoing operations of the applicant. Does that mean that you use the 3P program and you kept just one individual to come in there? And then how does that affect you? So we'd watch that closely here. We're hoping to get additional guidance. This is definitely going to take legal counsel, and possibly if we do have some information by next week, not to put the Bracewell folks on the spot, but maybe we'll get one of their attorneys to come on and give us some additional legal guidance that we can at least take back and start thinking about with regards to what might be necessary here in the coming weeks after we get the new guidance from them. But that's something we're watching really closely. What does it mean? You know, regulators, they gave a hold harmless provision for the lenders, and so the borrowers must make that certification. There's 3 certifications that you all made on your application. The most important one, again, necessary to support the ongoing operations of the applicant. And the lenders, this is what we know and we've heard from at least folks at Treasury and SBA, they are again going to rely on the documentation before, there, and after. So with that, just pause for a second and we'll talk about a couple of the questions that we've got in with regards to the strings that were attached and with regards to the 3PP program forgiveness. We had a question come in about the 3P program. Forgiveness amount is considered taxable income for the business. There is a provision, section 1106, subsection I in the CARES Act. You look at the bottom of this, and the IRS came out last night with I wouldn't even call it a mixed blessing. I think it's shaken some folks this morning. But what it says is that this notice says that the income associated with the forgiveness is excluded from the gross income for purposes of the code, pursuant to the 1106I of the CARES Act that said that this is not taxable. The forgiveness amount is not taxable for federal income tax purposes. Here's the however. The ruling last night, and we're not tax analysts, so this is where you definitely are going to need more guidance, and literally we just started reading it this morning. What they did is they said you cannot deduct your wages as you normally would as expenses if you're going to have your loan forgiven. This falls into what we've talked about a couple of Fridays ago, the double dipping criteria that the IRS and Treasury have done. You recall the employee retention tax credit for that, the 10,000, the 50% that they had there. They said you can't take that if you're going to get the loan forgiven. Same thing on your EPSL, EFMLA, to have that fully reimbursed, to have it a fully refundable tax credit. If you do claim the refund, you can't use the loan wages for it. So same thing. They're saying it's a double dip provision. We've gotten a couple of quite upset emails this morning from folks that are indicating that this is not what they accounted for, the ability to write off the wages of their employees and possibly rent and utility expenses as well, was factored into when they thought that they're moving forward in their financial situation. So we understand, we hear you. Chairman Chuck Grassley of the Senate Finance Committee said last night and this morning that he's also doesn't think this is exactly the intent of Congress as well. So the way this would get changed for all your accountants that are going to email you frantically today, the only change for this, unless IRS reverses itself, would be to Congress to come in and then have something where they would actually have to say no and clarify, because the CARES Act is silent on the question of deduction as a deduction of wages as an expense. However, it is obviously clear versus the 1106I provision there that they are taking a look at making sure your income is not considered, your forgiveness rather is not considered income. So I know that was quite a bit, and I'll turn it over to John to talk about what's next. And if you all do want to keep sending us more information of how this now changed from the IRS that came out last night impacts you, please let us know, because again, we've all trying to figure this out on the fly since they literally just did this about 12 hours ago. John?
Yeah, moving forward, the Senate is coming back into session on Monday. The House was also announced that they were going to come in on Monday, and they quickly changed their mind when they were advised by the Capitol physician that a number of construction workers and Capitol police officers have been diagnosed with the COVID-19 virus. So they have postponed coming back into session for a couple of weeks. Senator McConnell's point is that they can't start discussing a CARES 2.0, the next phase of this program, until we start negotiating and person to person in person. And so that's why that was his argument for bringing the Senate back into session. A majority of senators are over 65 years of age. Dianne Feinstein, the oldest member of the Senate, I think is like 85 or 87. They have expressed tremendous concern, especially because with the House not coming back, what the Senate will be doing is more confirmations of presidential appointees, and that is not what some of the United States Senate believe is a good use of time during this pandemic. But eventually they're going to come together and start negotiating CARES 2.0. We feel confident, and we've mentioned over the course of time, Speaker Pelosi is very interested in seeing money for state and local governments moving forward. I believe I've heard a number of something. She wants an additional $1 trillion going to state and local governments. Mnuchin, the Secretary of Treasury, says he thinks, let's wait and see where things are going. President Trump wants more individual checks to be sent out to the American people. This is the $1,200 for an adult and $500 for children under 17 years of age. And so, and McConnell, wants some liability protections for employers who bring their people back to work, some liability protections. Clearly, the policymakers are miles apart, yet the need is great. You're hearing it from state and local governments, you're hearing it from hospitals, you're hearing it, we're going to hear it from manufacturers when the PPP program runs out of money. We were waiting to, see how the EIDL program, when that gets back up and running, but $50 billion is not a lot of money when you look at it in terms of how much they've already spent already. So if we're at a wait and see. Omar and I are of the belief that, Congress works its deadlines. The next big deadline is probably Memorial Day, which is when the Congress has planned another recess. And so that probably is the time frame that we're looking for when this next CARES 2.0 moves forward. But it's going to depend on what the policymakers are hearing from you and the American public when money starts drying up and when the hospitals stop getting their funding, when the state and local governments, they push back their tax filing deadlines and such. And so it's going to depend on the uproar that the American public have. It will help determine when this next phase moves forward.
Right, and I think part of it to keep in mind here as we're getting ready to wrap up. We're at the 30-minute mark here. We like to keep it at about half hour. John mentioned that Treasury and where we are right now on funding. The thing that we get the question is the 3P program and EIDL. Treasury's not pushing for that. The Mnuchin does believe that all 60 million small business employees should now be covered. So we're going to have to watch out from that pretty closely. And our survey results that we get from you all in the next couple of weeks will tell us, do we need another round? One thing we do want to address on the 3P program, the 8 weeks being pushed to 12 weeks. We've gotten this quite a bit from a number of members. We have not heard that is an option at this point. We still have to take a look at the forgiveness guidelines, but no, we are not picking up. They're looking to potentially move and extend that 8-week threshold over up to 12 weeks. But let me turn it over to the Bracewell folks as we're getting ready to wrap, because there is still quite a bit going on, a lot of media attention on this issue, obviously.
Yeah, and I just want to emphasize something. This is Paul, by the way. I wanted to emphasize something that Omar said, that the PPP loan program is under media scrutiny. People are going through public information and making hay about the companies like the LA Lakers who received the loans. Just keep that in mind for yourselves. I mean, Senator Rubio has mentioned that all the PPP loan recipients will be made public. He did that in a conversation he had with some Florida legislature. So just be smart about it. I had a client, not a PMA or an NTMA member, who had moved his few $100,000 a loan to a money market fund at the bank, and the bank contacted him, said, you're the only one that did this, and it's really smart of you to do, but it kind of makes us nervous if somebody's watching, if we get audited or something. It was perfectly legal. He's using other money he's got other money to pay his payroll costs, so that's just the level of scrutiny that banks are providing as well. Turning to media, other more positive media attention, we continue to have our members in the news. The announcement this week on the GDP came out. We had a PMA member in an AP story. We had the Wall Street Journal talk about difficulties at NTMA Wall Street Journal is doing a story about difficulties that manufacturers are having in Mexico regarding the COVID restrictions, and we had a member speak to them. So we continue to be asked for comment on relevant issues, and also we are pushing out the good news stories about all the great things that you're doing to pitch in, everything from making metal strips to making face masks, to donations. So please keep that coming, and visit the One Voice Twitter account, follow us, and you'll see all that, you'll see that news that we push out. Caitlin?
Yeah, that's right. One thing to highlight, we showed on the onevoiceinfo.org site, there's a new section on there called Members Make a Difference. We're collecting stories there, publishing them. Some of them are news stories, some are written specifically for the website, but it allows us to amplify members. We have already received 15 member stories. I know solicitations have gone out from both associations and, you know, informally and formally. So please do continue to send those in. Some people have responded directly to me after these webinars. That's great. So, you know, if you don't see your story up yet, be patient. You know, we're turning them around as quickly as we can and getting them up on the site. So thank you for those. Also, if you want more from us, need other updates, do check out our podcast. Most of you who tune into these webinars know it well, Talking with One Voice. You can find it wherever you get your podcasts. And if you are a listener of the podcast, rate us and review us, and you'll help other people in the industry find the podcast.
And as we take some questions here quickly, just want to maybe just go back a little bit to the audit. Feel free, as the question box on the right, to type it in. We had one question was, so if we have a PEO, they should be keeping track of all this from a payroll perspective. And the answer is yes. So when we go into paychecks for the Franklin Partnership, there is a 3P program, and there's a COVID response, and all those links are already there. And so maybe just even a bit of commentary on the audit. I don't want folks to make that out to be worse than we think it's going to be, because again, your payroll is already, all this information is mostly being collected. They shouldn't be going out and asking you for anything beyond what you've already provided and we're going to provide. They don't necessarily technically have the capability or the power to do so from what we've been seeing. And so again, it's just going to be mostly making sure that, especially if you've got your funds in 2 separate accounts, that will certainly simplify things as a strategy some lenders have told us. But just keep track of everything that you've already been doing, like your payroll costs. Make sure your mortgage, your utility, your interest rates, interest for mortgage interest and those items, and rent are all calculated as you normally would. And so that's why we would go ahead and suggest that you keep focus on, keep doing what you normally would be doing. We'll worry about some of the audit criteria when we get it out, but a lot of this information you've already been providing your lender anyway, and you were already going to provide it to the lender afterwards anyway as well. Another question that we got, where to find the One Voice Labor and Employment webinar with the attorneys from Bracewell. Caitlin, I think you said you put it under the webinars section on the website?
Yeah, so if you go to the onevoiceinfo.org website, in the very first section on the homepage, you will find a section called One Voice Webinars. Look there, it's the first one, and it is, yeah, it has the Bracewell logo there on the first one.
Thank you. Another question, if we have our 3P funds and they're in a separate account, should we literally be paying our payroll and other expenses with these funds? Or can we just keep track of them and submit that information for forgiveness? We'll get back to you on exact question or exact answer on that. I think some of your colleagues might also have an answer to with regards how they've been using the separate account, whether they've been now tapping that in for their payroll costs directly for payroll processing, or if they've been transferring it over after they've calculated that. So we'll check to see what some of the best practices that individuals have been using on that front as well, and we'll address that in the next week's webinar. Are there any other questions that we're coming up on now, 40 past the hour that we've got? Nope. If not, then we'll go ahead and conclude today. Again, you'll find this in a couple hours here, posted on the website, onevoiceinfo.org. You scroll down, it'll be right under webinars, and you'll feel free to share it. You'll have a hard copy. That way you can pass it around your shops. Next week, we'll be in touch with regards to a couple updates that we just received with regards to CDC and a couple other guidance as well. Thank you, everyone. We'll talk to you next Friday at noon.